Hey everybody, thank you for joining us during CAF's 2020 virtual conference and the Poolside chats. We're glad that you were able to be here today. Typically, I believe if we were all at CAF right now, we'd be sitting around the fire pit with a cocktail in our hand, hopefully thinking about when the coronavirus is at an end. But today, my partner Greg Pfeuffer and I are going to go through some of the pertinent information that you need be thinking about with regards to the CARES Act funding, and if you are prepared for that funding. Greg and I are both with Miller Prost. We are a full service CPA firm that services primarily the healthcare industry, our largest division being in healthcare, and specifically you guys in the senior services space. So we're excited to be here. Most of Greg and my life over the past 6 months has been all encompassing CARES Act funding and making sure you guys know what you need to do next. So I'm going to turn this over to Greg to talk about our agenda today and what we have in store for you next.
Thank you, Tiffany. Yes, very true. The last 6 months have been interesting to say the least, but at least for now, we're virtually poolside and all is well. So, or getting well, maybe. So the agenda, yeah, that's right. The agenda for today, we're going to spend some time talking about the PPP, the Payroll Protection Program, and I'm going to handle that portion. Just by way of introduction, I'm the director, I'm a partner and a director of our CFO consulting services for Miller Prost, and handle quite a bit of healthcare clients in that capacity as well, and SNFs and CCRCs and independent living, assisted living, and the like. So I'm going to focus on the PPP today, and Tiffany is going to go over the HHS, the latest and greatest. We're going to try not to reiterate some of the early stuff and focus more on some of the recent activity, because as everyone knows, things change quickly in both of these areas. So it's important to stay on top of that. So I gave you a little introduction about me. Tiffany, would you like to introduce yourself?
Yep, and here's our contact information. Again, as Greg said, clearly in 50 minutes of the poolside chat, we're going to get through 1/10 of what the information is that is out there. And this is a recorded session which at the end, we're going to be live for question and answers. So I'm sure that Greg and I, by the time we sit with you in 2 weeks live from now, we'll have many an update to also share with you as this changes so rapidly. So I lead our healthcare division. I know many of you as CAF family. I'm also the chair of our associate council and on the board of directors for CAF, and proud to serve and do so. But everything that all encompasses all the services that we do for our healthcare providers, I'm the partner over that division, and have been part of CAF now since I was a little before 21 years old. So looking good, still intact, and couldn't be happier with feeling the love of CAF. So glad to kick this off. So I'll turn this over to Greg to start you with some very exciting poolside chat about PPP.
Thank you, Tiffany. So just to kind of put our arms around what magnitude the PPP provided to the industry and the U.S. as a whole, there were $525 billion of funds that were loaned under the PPP program. And the average loan size is $101,000. So that's a lot of money, and if the average loan size is $101,000, that means there were a lot of borrowers as well. So a program of this magnitude was something that was definitely unique for the SBA, and continues to be unique for the SBA and the lending world as they navigate first through how do we loan the money, and now how do we handle the forgiveness applications. So as far as some of the top industry sectors that received PPP loans, healthcare was number one. They received about 13% of the total amount, and following that was professional services, which accounting firms are a part of, and construction, manufacturing were rounding out those industry niches above 10%. So as we talk today, we do want to leave everyone with some resources that they can refer back to. And the SBA website, sba.gov, has an excellent section for the PPP loan, as does the IRS website, irs.gov. You go to the IRS website, go into the search bar, just type in PPP, and it'll pop up. And I actually go to the IRS website first and then to the SBA. Either place, you'll find similar content and information, the latest and greatest. They're very good about updating based on the new guidance and regulations. Just very quickly, how did we get to where we're at now? The PPP loan process, it was very traditional in the fact that it's a loan. You applied with a lender, you received your funds, and then it kind of skewed from any other normal loan situation that you might have. With these funds in this program, as you know, you originally started out with 8 weeks to spend the money. It got expanded to 24 weeks. 60% of the money must be spent on payroll costs. As long as you maintain certain levels of salaries and wages and full-time equivalents, you will receive 100% forgiveness, or your forgiveness won't be reduced for those reasons. And then this middle bullet point here, loan forgiveness applications are due within 10 months of the last day of the covered period or within 10 months of 12/31/2020, whichever is earlier. So there is some time to apply for loan forgiveness. It's not a mad rush like it was to get the money. And there's some strategies around that as well. When is the right time to apply? The lender, once they receive your loan application for forgiveness, has 60 days to give it a approval, and then they submit it to the SBA, and once the SBA receives it, they have 90 days to confirm the lender's decision and recommendation. There are, and continue to be, multiple applications available. Originally, they released the Form 3508 for everyone to use for forgiveness. Then came the 3508EZ, and then the most recent is the 3508S. And then in addition to all three of those, each lender potentially could have their own equivalent form that works with their technology within their bank. We found that the larger banks have an online portal which replicates the application on the 3508, whereas some of the community banks are just accepting the SBA default applications, one of these forms, 3508. The 3508S is applicable if you have less than 50,000 in PPP loan, and in aggregate for all entities owned, that's still less than 2 million. So it's a simplified form. It's about 1 page of information, and really you don't have to supply any calculations behind it. Less documentation. It's more reliant upon representation. You still have to maintain that documentation, but the form itself is quicker and easier. There's a copy of it, as you can see. The 3508EZ, if you meet one of these three criteria, you can use the form 3508EZ. Basically, the first is if you are self-employed, independent contractor, or sole proprietor, that you didn't have any employee salaries in the computation of your average amount, the EZ is available. The second is if you didn't reduce anybody's salaries or wages by more than 25% and you didn't reduce your FTE count, then you can use the EZ. And the third alternative is if you didn't reduce any salary or wages by more than 25% and you were not permitted to operate at the same level of business activity because of COVID-related regulations and impact, then that gives you an opportunity to use the EZ form as well. So all are very similar. At the end of the day, you're still computing what's your qualified eligible expenditures for forgiveness. So the main components of the PPP loan forgiveness, your payroll costs, and then within that, there's cash compensation, table assignment considerations, non-cash compensation, and then owners. And then there's non-payroll costs. Within that, there's mortgage interest, rent, and utilities. There's FTEs, full-time equivalents, and there's a calculation, and then some reduction exceptions and 2 safe harbors. And the last component is the salary and hourly wage reduction. So all of that put together will determine your ultimate forgiveness for PPP. So the first section that we'll focus on are the compensation payroll costs. In the application itself, there's a PPP Schedule A worksheet that has summarized, Table 1 and Table 2. And that is the applicable section for what we're going to talk about here. The format for the rest of the presentation is I try to show the application pages that are applicable, the instruction pages that are applicable, and then move into the guidance and frequently asked questions that have been published that help us navigate PPP forgiveness. So the takeaway from your payroll cash compensation discussion is this is gross wages. So that's one takeaway. Early on, is there confusion as to is this gross or net wages? Gross wages is the appropriate answer. You're limited to an annualized salary of $100,000 as prorated for the covered period. So if you have a 24-week covered period, each individual employee can take no more than $46,154, which is the equivalent of $100,000 on an annualized basis. So those are the major takeaways on what you should know about qualified payroll costs under the cash compensation. The other is, which isn't too applicable, but we do see it occasionally, is the employees included have to be residents of the United States, have a principal residence of the United States. This category excludes 1099s, excludes funding from other sources. Given some of the new discussion on payer of last resorts, that takes care of, PPP is basically use the money first and then you get to move on to HHS funds. So there's not as much ambiguity in that area. But it's still some strategy as to how and where we spend the money and apply for forgiveness. A couple of follow-up questions in the frequently asked questions published by the SBA. If there are payroll costs that were incurred during the covered period but paid after the covered period or alternative covered period, can you include those? The answer is yes, as long as it's made on your normal payroll cycle. How about payroll costs that were incurred before the covered period but paid during the covered period? We've seen this a couple times already. So your covered period starts, say, on April 24th, and your first payroll is April 26th, which covers a time frame that was before April 24th. Well, according to the frequently asked questions, you can include that. So that's good news. And then, are you required to calculate for partial pay periods? Really, this is at the end of your 24-week cycle. Most folks are burning through the PPP money in the middle of their 24-week cycle, so this won't be applicable. But if at the end of 24 weeks, you're counting on that 24th week to use the rest of your PPP funds, that last payroll you will have to split between covered period payroll and outside of the covered period payroll. Table assignment, where do I put these employees? In the takeaway here is in 2019, we must look to each pay period in 2019 to determine on an annualized basis, did somebody make over $100,000? So for example, if you have 26 pay periods, 100,000 divided by 26 is, which is a biweekly payroll, is $3,846. So you would look at every payroll, every pay period, and look for employees that made more than $3,846 in any given pay period. So if somebody made more than that in one pay period, they would get assigned to Table 2. So takeaway, you have to look at 2019, and it should be done on a pay period basis. Non-cash compensation. This is health insurance, retirement plans, and state and local taxes assessed on employee compensation. The key concepts here are only include the employer portion. So you do not include anything deducted by or from employees. You only include the net amount that it costs the employer. So if your health insurance premiums are 10 grand and you include or you capture, you know, $7,000 from your employees and your net cost is $3,000, well, only that $3,000 is eligible for forgiveness. On the retirement plan side, the key concept, as we'll see in the frequently asked questions here, is you cannot accelerate your retirement plan contributions. So if you make a year-end retirement plan contribution historically, you cannot accelerate that into the covered period and get credit for that for forgiveness purposes. And then the third section here, compensation to owners. Owners are their own classification and treated separately. So they're not in Table 1, they're not in Table 2, and they're not in your FTE calculations in Table 1 or Table 2. That said, what is an owner? Well, there's been some relatively recent guidance in late August indicating that if you own less than 5% of a C or an S Corp, then you are technically not falling under the owner cap on compensation. So that's good news. If you have an owner that's less than 5%, you're not subject to the compensation rules, caps that we'll go over here in a second. So for owners, they have a different cap. The owners are going to be limited to the amount of gross wages or compensation that they can include based on their entity type. Generally speaking, owners are limited by one of the three amounts. The lowest number between what they were actually paid and incurred during the covered period, 2.5 months of 2019's compensation, or $20,833 for a 24-week covered period, $15,385 for an 8-week covered period. So for an owner that owns more than 5%, you look at, okay, what did they get paid during the covered period? In 2019, what is 2.5 months of 2019's compensation? And then you look at the regulatory cap of $20,833, and then you pick the lowest of those three options. Another caveat with owners is this cap is applied to all entities that they own that receive PPP funding. So if they have multiple entities, this $20,000 is not $20,000 per entity, it's $20,000 collectively. But the good news on that front is you can allocate it however you like to the different entities. The other caveat with owners is pay attention to your organizational structure and your entity type. C Corps are treated slightly differently than S Corps and self-employed and partnerships. So pay attention to that. In essence, there's a cap. What gets included in that cap in terms of health insurance and retirement benefits varies based on your entity type. Non-payroll costs, and I know I'm going through this rather quickly because I want to get to the recent updates too. Non-payroll costs, mortgage interest, rent and utility, rent or lease payments, and then utility. Takeaways, these expenditures need to be paid during the covered period. So they can be incurred straddling the covered period. So if you've got a utility payment that has a service period that is partly in the covered and partly out of the covered period, you can still take that as forgiveness as long as you pay it during the covered period. And then at the end of the covered period, as long as you pay it according to its regularly scheduled payment. The other takeaway is that all of these categories had to be in existence as of February 15th, 2020. So no new services, no new rents, no new mortgage interest. Now, renewals on leases are okay, but just nothing expanded or new. Covered that. This was a question that came up early on with the interest. Is it just real estate or is it personal property as well? They clarified. If you have mortgage interest or interest payments on anything that's secured by personal property, such as an auto loan, that was common, that can be included in your loan forgiveness. So that's good news. Couple of updates on the utilities and non-payroll costs. If you are a tenant and have a subtenant, you're only allowed to take the portion that is not attributable to your subtenant. So it makes sense, you know, there's 100% of the building and you're only occupying 75 and your sub is occupying 25, you can only take 75% of those total costs. Related party update on rent. This is important to know. If you're paying rent to a related party, there is a cap on the amount of rent that you can take for forgiveness, and that cap is to the extent that there's mortgage interest on that covered property. So you may have to determine from your related party how much mortgage interest is applicable out of your entire rent payment in those situations. FTEs. So one of the ways that your forgiveness is reduced is through full-time equivalent quotient, reduction quotient. Shows up on your table 1 and table 2. And basically you calculate your FTEs, which we'll go over in a second, for the covered period, and it's average weekly FTEs for the covered period, and compare that to your average weekly FTEs for the period of February 15th, 2019 to June 30th, 2019, and also the period of January 1, 2020 to February 29th, 2020. Whichever is more advantageous is the one you select, and the covered period average FTEs divided by your reference period FTEs becomes your FTE reduction quotient. If that is less than 1, meaning your FTEs have gone down, then there is an option, as we'll go over, to be awarded safe harbor so that you don't have your loan forgiveness reduced by that amount. And we'll go over that in a second. When calculating FTEs, a couple things to remember. One, it should be done on a weekly basis. And that weekly basis is considered a 40-hour week. So many folks have, you know, biweekly or twice a month payrolls, and they say, oh, I'm just going to use my hours from the payroll report. Well, really, you need to divide out, because the math is different, the hours into a per week basis. So, you know, if somebody works 40 hours each week, it's not going to impact your calculation. But if somebody works 20 hours one week and 60 hours the next week, in total, it's still 80 hours for the pay period, but your average weekly FTE calculation is going to be different. If you have a lot of folks that are part-time and work less than 20 hours a week, you may want to consider the simplified method for the FTE calculation, which allows you to assign 0.5 to anybody that is less than 1 full-time equivalent. The caveat here is that you have to do that throughout all FTE calculations. So it may make sense in your covered period, but you want to make sure that it makes sense in your reference periods and your safe harbor periods as well. This is just the interim final rule that explains everything that I went over there. Okay, exceptions and safe harbors. So the idea is your loan forgiveness is going to get reduced if your FTEs went down. Well, if your FTEs went down for legitimate reasons, you're not going to be punished for that. So those legitimate reasons come in the way of FTE reduction exceptions. So you can read here that, in essence, if you if somebody had to reduce their hours or, you know, be temporarily laid off, and you tried to hire them back or restore their hours and they said no, then as long as you can document that, you won't be dinged for that reduction in FTE. Also, this is an important one in that number 3 in that top box. If you have employees who were fired for cause, voluntarily resigned, which also means retired, voluntarily requested and received a reduction of their hours, and you couldn't refill that position, then those will not hurt your loan forgiveness adversely either. So as long as they're documented, there are FTE reduction exceptions to be aware of, and that applies to both those making over 100,000 and less than 100,000 on an annual basis. The safe harbors, very quickly, say your FTE reduction quotient is 90%. Well, there's safe harbors that allow you to restore your FTE count to avoid that forgiveness reduction as well. There's 2 of those. One is if you're able to show that you cannot operate because of COVID and guidance issued by Health and Human Services, CDC, OSHA, et cetera, then you're completely exempt from the FTE calculation. Second safe harbor is if you restore your head count by the time of the application or December 31st at the latest to the level of your FTEs at February 15, 2020, you will not be dinged for a decrease in FTEs during the covered period either. So there are a couple safe harbor options. These are the rules that go over what I just said. That's the actual calculation in the forgiveness application. Salary and hourly wage reductions is the last section before the recent updates that I'll go over. This is fairly simple. The other way your loan can get reduced is if you cut people's pay. And the way the regulation indicates if you cut people's pay by more than 25%. So they give you a 25% window. So if you reduce somebody's pay by more than 25%, whatever that amount is over 25%, then you will have to extrapolate that for the 24-week covered period, the entire 24-week covered period, and that will reduce your loan forgiveness. So there's a detailed instruction in direction and step-by-step computation in the instructions. But in essence, if somebody is making X, you take X times, and they're making Y now. If that Y is more than 25%, say it's 30% less than what they're making, then that incremental 5% is extrapolated based on their average hours worked during Q1 over the 24-week covered period to come up with your reduction. Documentation, your lender will walk you through this, but basically there's documents you're required to submit to your lender, and then there are documents that you retain in your files. The lender documents basically support your payroll and your FTEs and include your 941 and rent leases and your utility bills and canceled checks thereabout. So pretty straightforward. Okay, the new updates. Very much to be aware of is changes in ownership. If there is a change of ownership, there are requirements for informing your lender and your SBA before that change of ownership occurs. A change of ownership is defined as something greater than 20%, at or greater than 20% of common stock or 50% of the assets, if it's an asset sale. So to have a change of ownership, there has to be a common stock or ownership exchange greater than 20% or an asset sale greater than 50% of the assets. If there's still a balance on your PPP loan, there's two avenues. One is inform your lender and obtain lender approval, and the other is obtain SBA approval. So in the case of a stock sale, so you're over 20%, so you've got a change of ownership, but it's less than 50% of the stock, and that could be related parties or current owners as well. If it's less than 50% of the stock, then you just have to get approval from your lender and not the SBA, or you file your forgiveness application and you set up an escrow account with the balance of the PPP loan. And then that escrow account will be released upon receiving forgiveness. If it's an asset sale and it's greater than 50% or more, then you inform your lender and set up, file your forgiveness application and set up an escrow account. And then that escrow account will be released after forgiveness is obtained. SBA approval is required if it's not one of the two scenarios I just mentioned. So if you had a stock sale greater than 50%, then you would have to get SBA approval of the exchange of ownership. And there's a procedure for that. Just so that everyone knows, what are the lenders looking at? They're not diving into tremendous amounts of detail. They're going to rely on your representations. They're going to look at the application, make sure that it's mathematically correct, make sure that they can track the numbers to the payroll records and cancel checks and bank statements, and that's about it. and the rest of it, they're going to rely on your representations. So just know that, that they'll do that, submit it to the SBA. SBA will approve their decision or deny their decision within 90 days. And then the SBA does reserve the right to audit different forgiveness applications if they so choose to do so. Deductibility of expenses. This notice 2020-32, hot topic right now. Right now, as the rule sits, the expenses forgiven are not deductible for tax purposes. This is being contested. We hope it'll change, but as it stands right now, the expenses that are forgiven are not deductible for tax purposes. There's, if the rule stays that way, we're expecting some further guidance on what happens if that straddles tax years. When do I account for that, and what year do I pay tax on that? So to be determined, more info to be provided on this. And lastly, with the EIDL, if you received an EIDL, that amount will be reduced from your PPP loan forgiveness in accordance to the rules and regulations that were set up front. So basically, now we're not talking about the advance, we're talking about an actual EIDL loan received. So keep that in mind if you receive that also. So that is the update on the PPP front. And now I will turn it over to Tiffany to go through the HHS and provider relief funds.
Awesome. Thanks, Greg. I'm going to now share my screen with you all. Okay, so in the next probably about 10-15 minutes, we're going to go through HHS funding as quickly as possible. And I can tell you, just like Greg, who is trying to go through it as quickly as possible that he could do, you probably are going to have questions. I'm going to, big warning, that a lot of this information is based on some of the FAQs that recently came out. Today's date, I believe, is 11/4. So that information is coming out so real time that I can promise you by the time we get to the CAF conference in a few weeks, more and more information is going to come out, and we'll keep you posted as we go along. So just like in leading off, I don't have a slide in this like this as well, but just like Greg was saying, from a taxability perspective, I did want to make sure that you all understand too, the HHS revenue is going to be taxed as revenue. And so keep that in mind. That has been quite a bit of questions that come up that you will be, this is going to be counted as part of a tax issue. I have in here a timeline of the CARES Act distributions. So as you can see, a litany of money that has come out. The only thing I think that hasn't been updated on this list just yet is the most recent phase funding that was for your infection control. So all those quality indicators, the first of 4 payments came out this past week. That is also going to be a part of this. So you have this at your disposal so that you can kind of track, did you get everything? Was there something that you missed, etc. Okay, what did HHS bring us? So HHS, a variety of different things, we're going to call them the provider relief fund payments. So provider relief fund payments, the things I'm going to go through with you today is on the reporting requirements, okay? That is really essential. And there's 2 different types of reporting requirements that we're going to go through. One is the general overview for reporting that's going to happen at the beginning of next year. Who needs to report for that? So any of you providers, healthcare providers, including all of you members of CAF and any other types of hospitals, dentists, whoever received provider relief fund payment from the Health and Human Services that received an aggregate total of $10,000. Again, the collective total of all of that will have to report next year. Now, keep in mind that this reporting requirement is going to be on a calendar year end basis. They want to know from the time of January of 2020 to the time of December of 2020, what funds did you receive and how did you spend that funds? It doesn't matter if you're a fiscal year end. For this particular reporting purposes, that you're going to have to report as a calendar year and the total year to date of what it is you spent on this. Okay, key dates. January 15th, 2021, that's when the portal is going to be open for all providers for you to start putting in that information. As many of you got used to the phase 2 funding and uploading information and the phase 3 funding and uploading information, it'll be similar to that. February 15th of 2021 is the deadline to report. So you have a month to get all that done. Short period of time to be sure that you have documented all of this accurately. And as you'll see from many of the FAQs that are coming out, we still don't have definitive guidance as to do this. And so I'm sure all of us are going to be scrambling at the last minute. The questions that come to me, Tiffany, so if I didn't spend all of that money by the time we get to year end, do I need to give it back? No, you have July 31st, 2021 is the deadline for you to exhaust all of those funds, and you will have the ability to report again in that second quarter as to what you've used for those funds from that after February 15th deadline on. Otherwise, you have to return those funds. So you have a next opportunity. What does this reporting not include? Okay, we're gonna go through the reporting. What does it not include? 3 different distinct pieces of money that came out to you. One, again, I mentioned to you, nursing home infection control payments. One of those payments was recently received to you about a few weeks back, a month ago. That was that $10,000 plus $1,450 per bed. That was, those terms and conditions were specifically for infection control and testing purposes that you had to spend that dollars on. Very different than what we would call general distribution. This is a targeted distribution. The infection control also included that extra $2.5 billion that came out that was specific. Again, those 4 payments that are coming out, one of which that already was sent for quality indicators that related to how you were reducing COVID and the cases of death within your health centers. So those requirements for reporting, that will be separate, not included in what we're going to talk about today. Addition to that, if you're a rural health clinic, many of you might have or be affiliated with rural health clinics, that's going to be separate in reporting. And some of you may have had access to the HHS uninsured portal where you were applying for funds for that. Again, will be separate reporting. I always want to make sure that you guys have access to this information so that you too can keep an eye on this real time. I have the links here. Really important. I'm telling you, I'm looking at this online every day, several times a day, because that's how rapidly this stuff is coming out. All right, so for reporting, what is it they're saying that you need to report? You need to report healthcare expenses attributed to coronavirus, but not reimbursed by another source. Now, that was a big term until recently the FAQs came out that I'm gonna go through with you as to what does another source mean, okay? That included, so this is the big kicker here, is that HHS is saying that all of your G&A costs, and we'll go through some of that, as well as other healthcare related expenses that are specific to COVID could now be included. In addition to that, we have this big talk about lost revenue. Lost revenue, again, represents a negative change from year to year of net patient care operating revenue. Again, further FAQs came out this past week to really define and still leave it very much define it as clear as muddy water, really. It's still ambiguous to many of us. And so we have a lot of questions unknown, but I am going to go through an example as we know today. I already explained to you how long I can use those funds, and that's here in writing. Okay, other things that you're going to need to report. Very standard stuff. You guys should already be used to this from the other reporting periods that you had to do. What's your entity? Some of you guys have one TIN, and that one TIN maybe encapsulates many different health centers that you have, or a home health agency, etc. You're going to report as the TIN and those individual entities and how you use those funds. Your MPI number, all of you know that. Your year-end date, and what kind of tax classification you are. Okay, here's where it gets into the nitty-gritty. If you are that provider that received less than $500,000, you're essentially going to have to report a financial statement and listing out what were those expenses, what was that lost revenue, and how did you use those funds. Not much more in regards to what the supporting documentation is, or the very in the weeds detail are you going to have to supply. They haven't given us a template yet. That is one thing that we've been asking for. They posted it on the website this past week that there is a template to come. So once we know what that template is, I think we're going to have a lot more clear guidance as to, hey, what does this type of provider have to provide to you, and what does the more detailed provider have to provide. Okay, if you're that provider out there that received $500,000 or more, and I know there's a lot of you because I talk to all of you guys all the time, this is the breakdown of as far as general and administrative expenses. Mortgage and rent, that's right, people. All of your mortgage and rent can be included as a general part of G&A. Insurance costs, personnel. Now, keep in mind that personnel is what you guys paid to maybe hazard pay or to additional workforce or workforce training that had to do with coronavirus. Keep in mind, back to Greg's comment, that PPP money has to be spent first before you get into this, and it cannot overlap. No double dipping, as they say all the time. Note, just like with the PPP discussion, there's also a salary cap when it comes to the calculation of the HHS on the executive level salaries, that they're capping that at $197,300. So when you go to calculate, hey, how much money can I apply to this? You're capped at that amount. Fringe benefits, again, easy. Lease payments, utilities, and other expenses. Again, everything else that you may have incurred because of coronavirus. So supplies, all that PPE, equipment, IT, all of you guys may have gone into this really information technology and the telehealth world. If that was you, a lot of you bought iPads, you know, things so that you could connect your residents with the outside world. All of these things get included. Okay, this is what recently came out. I even put here as of 11/4. Wow, new information that's coming out all the time. All right, what is included for salaries and comp? Again, direct employee, full-time or part-time, yes, contract labor, any temporary workers and expenses, eligible expenses, they're not reimbursed by other sources. And the kicker here, the one thing that they now define as other sources includes, listen carefully, includes all general revenue. Okay, so before you do anything, your calculation is going to be, here's all of my expenses, here's all my general revenue. How do I apply all of that first before I even tap into HHS revenue? Okay, so next thing that I want you to know, again, I'm picking out these key FAQs for you. When reporting my organization's healthcare related expenses attributable to coronavirus, how do I calculate those expenses? Providers first have to calculate their expenses, so all of this information related to those years, 2019, 2020, and calculate the change in year-over-year expenses and identify the portion that is attributable to coronavirus. Okay, so what of this stuff is attributable to coronavirus? On a G&A side for leases and rent and your facility cost, they're deeming that healthcare institutions, the cost of doing business is included in that, because if you didn't have the ability to open up your doors, you wouldn't be able to continue to serve COVID-related patients. Okay, this is where there is a little bit unclear, somewhat ambiguous, that we're still seeking guidance on. This was reported of when reporting an organization's healthcare expenses attributable to coronavirus, how do I calculate the expenses that are specifically not reimbursed by other sources? I'm going to go through some of that calculation, but you see here in red, provider relief fund payments may be applied to remaining expenses or costs after netting the other funds received or anticipated to offset those expenses. So that means you are first going to have to account for all of your general revenue, account for any revenue that you received from, if you're a Medi-Cal provider out there and you got that 10% increase. What we're advising our clients now is that that 10% increase is baked into your reimbursement rate. Okay, it's not a separate code somewhere. You need to track that revenue as separate revenue for COVID-related expenses and how you are utilizing those expenses. So you have Medi-Cal additional revenue, you might have PPP additional revenue, you might have had EIDL additional revenue. All of that money has to be spent, and your general Medicare, private insurance, all of that has to be spent first on both all of your overhead expenses, all your day-to-day expenses, and all your PPE expenses and COVID-related expenses, and then you can come in and use HHS funds. Lost revenues, man, this is a big thing. Lost revenues is defined as the negative change in year-over-year net operating income from patient care related sources. And by the way, they're deeming our world, everything we're doing as patient care, okay? Unless you are somebody that may also own other lines of business, maybe DME, things of that nature, your health center is all inclusive patient related cost. What they're looking for, and I'm going to show you an example, is the negative revenue and net charges from patient care sources. So you're going to look at prior year 2019 compared to current year 2020. If you, quite a few of our clients had a zero, you had zero net profit or gain in or a negative in 2019. If you weren't making money in 2019, you get to start at a zero gain or loss for 2020 as far as truing up that. Okay, lost revenues attributable to coronavirus, how can those be calculated? I have here some conflicting guidance. And so I want to show you, based on this information that we have today, lost revenues, again, I have specifically from the FAQs, the amount of lost revenues eligible for reimbursement for the provider relief fund is capped at the change of 2019 to the 2020 actual revenue from patient care sources, less the provider relief fund amount used to cover those expenses, okay? And then they go in as of 11/2, that's this week, and give us this guidance that no, healthcare related expenses are no longer netted against patient care loss revenue. There is still no further guidance on that. I can believe that by the time we hit this conference, there may be, and so I'm sure there's going to be plenty of questions on this. Here is what we know as of today to give you an example of how we would treat lost revenue between 2019 and 2020. We're showing here what we have as actual revenue from patient care. I broke it down. Again, this is a very simplified example. What happened in 2019? What happened in 2020? We have our net patient care revenue here. Okay, I have here an asterisk. These numbers do not include any of the provider relief fundings or COVID relief payment from other sources. So none of the SBA, the FEMA, et cetera. Remaining amount of these funding sources have been applied. So we've got then your direct patient care expenses. Okay, what were those direct patient care expenses? What were those G&A expenses? We have to keep those in mind considering that's now included in the HHS. And now what is our net income or loss before provider relief fund, PRF provider relief fund? Expenses derivative, we have here 2020, we're at a negative 100 grand, 2019 positive 200. Expenses directly attributable to coronavirus, we're allocating as that being 150,000. So if I then take less that from any other sources, SBA, FEMA, whatever, now we're down to COVID expenses not reimbursed by other sources of 50,000, lost revenue at 200,000, less COVID expenses not reimbursed by other sources at 50. So now our available lost earnings is $150,000 that we can apply to lost revenue. Again, that is our interpretation as of today. Don't take this to gospel yet until we know further and more guidance has come out. What other reporting requirements are you going to need? These are very simplified information. Again, if you filled out the phase 2 or phase 3, you'll need to know some of your personnel. So your full-time equivalents, your part-time equivalents, it's going to be a full listing, I'm sure, like it has been with the other guidance that has been recently released, your patient visits and your metrics, so your available bed days. Keep in mind that HHS is creating portals for all types of healthcare providers. So some of the terminology could be, well, that's not specific to me in the nursing home setting. Well, it's also applying to dentists and hospitals and everybody and other physician groups and home health agencies. So they're being somewhat generalistic in the information that they're asking. All right, big question here. So I haven't spent all my HHS money yet. Can I hold that money until I need it and accrue interest? Well, you sure can, but guess what? If you end up not using that interest, you need to, and those funds, you need to return those funds with the interest that you collected back to HHS. So the government gets to make money on your smart move. If you did collect interest on it and you spent that money, that interest is also going to be reported as that additional revenue that I mentioned before that needs to be applied before you use the HHS money. All right, don't you love this? Confused? We are too. Oh my goodness, every single day seems like another crazy day. Are we living in Groundhog Day or what? So yes, as I said a million times throughout this presentation, I can promise you we're going to be delivering more updated guidance as we go along. Here's some information too as to kind of what it is that we recommend to track. Okay, your staffing costs, your expenses costs down to the minute detail, because Medi-Cal is also going to be auditing how you're using that specific 10% Medi-Cal money on COVID-related matters. You guys better hone in on what is that specific cost? What is this HHS targeted distribution cost? That's those targeted distributions that I talked about. That is for COVID testing matters. And then what is the general distribution? That phase 1, phase 2, phase 3, where did that go? What was that revenue? What was the expenses that are associated with it? Be very, very detailed as possible as it relates to that. More information here for you to look at. Okay, very briefly, separate to what you all have to do, because all of you at least made $10,000 or more, is those providers out there, yes, for and non-for-profit providers out there that made $750,000 or more, again, in the aggregate total of HHS money, but not including PPP, okay? This calculation exempts that PPP money from being included as a total calculation of needing to be audited. If you in your calendar or in your fiscal year, you may have got awarded that money, but once you spent that money, if it's in that $750,000 or more category, you are now subject to single audit requirements. What is a single audit requirement? It is technically a government standard audit. It's a little bit more in the weeds than a standard audit would be. If you've never had an audit before, buckle up, because it's a big audit for you to have to get prepared to take on. This $750,000 also includes anything donated to you, okay? So I want you guys to keep in mind that you guys may have received the donated equipment that came out. You guys may have been one of those donated testing equipments. You may have gotten supplies. You may have gotten PPE supplies. That donated cost, you need to assign a book value to those donated items that then feeds into the total of the $750,000. Big, big news, guys. Most of you for-profits have never gone through a single audit requirement. Some of you nonprofits have never had to achieve that level of having a single audit requirement. These are things that you're going to have to be prepared for if within your fiscal or calendar year end, you then met that $750,000 threshold. I have in here an additional guidance on that. That is a very, very quick overview, I know, of HHS and on PPP. And at this point, we are going to turn it over to questions live. Hopefully we're excited about being able to talk to you, and I'm sure give you any further updates on what's going on with the PPP world and with the HHS world. We have a COVID resource page. If you're not on our client alerts, get on our client alerts. Drop me or Greg an email. They're crazy. They're coming out often, and they're top of mind, real time, and things you need to act on. We've researched. We want to make sure that you guys are in the know. Here's our contact information as well. So feel free, if there's something specific to your organization that you don't feel like you can put in the questions box, we're here to help. So with that in mind, thanks to all of you in the CAF world. We're honored to be a part of this association.
Thank you very much.